With stocks poised to rebound over the medium term, investors should buy these three Dow Jones stocks on weakness. The Dow Jones Index has entered a correction, but worries about interest rates are overdone. Here are three undervalued Dow Jones stocks to buy on the dip. American Express. American Express reported stronger than expected third quarter results, and the company stated that consumer trends remain strong, boding well for its outlook. Caterpillar. Caterpillar has a low valuation and multiple, strong, positive catalysts. Microsoft. Microsoft reported very strong first quarter results and received an upgrade from a prominent bank. Let's dive in. Dow Jones correction. Here are the three stocks to buy on the dip. Welcome to Timely Investment Research. The Dow Jones Industrial Average has officially entered a correction, defined as a drop of at least 10%. The relatively sharp decline has largely been caused by the increase of the interest rate on U.S. Treasuries by about a percentage point in the last few months. But as I noted in a previous column, I feel like I've seen this movie before. That's because last year, the U.S. stock market entered a bear market, primarily due to worries that the Fed's rate hikes would send the economy into a deep recession. This has led to the rise of Dow Jones stocks to buy. But that scenario did not come close to materializing. Washington reported today that America's GDP had jumped a very strong annualized rate of 4.9% over and above inflation last quarter. And even for those who don't want to rely on GDP growth to gauge the economy, many companies' results also indicate that the economy is strong, such as General Electric, Microsoft, Amazon, and American Express have all reported stronger than expected third quarter data recently. So the evidence is showing that the street's focus on rates is still way overdone, and once again, I expect stocks to rebound strongly over the medium term, barring any huge geopolitical explosions. Here are three Dow Jones stocks that should surpass the market's uptrend over the longer term. Number 1. American Express. In my introduction, I mentioned that American Express had reported better than expected third quarter results. The company's top line jumped 13% versus the same period a year earlier to $15.38 billion and came in slightly above analysts' average estimate. On the bottom line, it reported earnings per share of $3.30, well above the mean estimate of $2.94. Moreover, the credit card network operator noted that consumer spending was strong, while credit quality was still superior to pre-pandemic levels. Those assessments bode well for both the stock market overall and American Express stock in particular. American Express has tumbled 12% in the last 3 months, and its forward price-earnings ratio is a very low 11.5 at this point, making it one of the best Dow Jones stocks to buy on the dip at this point. Number 2. Caterpillar. After sliding 15% since peaking on August 1st, Caterpillar stock has a very low forward price-earnings ratio of 11.9. The company's valuation is especially low because, as I've pointed out previously, Caterpillar is likely benefiting from the huge infrastructure projects that Washington is funding, along with the onshoring trend. Moreover, Caterpillar is also likely getting a significant boost from higher oil prices, since the firm sells oil exploration equipment. Caterpillar is also likely getting a boost from its mining equipment business, since electric vehicles, solar energy, and wind energy require many minerals to function. Also noteworthy is that Caterpillar is changing hands for around $243, about 15% below analysts' average price target of $285. Finally, analysts, on average, expect the company's earnings per share to climb to $21 next year, up from $14.24 in 2022. So the firm's top line is growing quite rapidly. Number 3. Microsoft. Microsoft stock is down about 10% since its July 18th high of around $350. But the software giant reported very strong fiscal first quarter results on October 24th, as the revenue of its cloud unit jumped 29% last quarter versus the same period a year earlier. Overall, the company's sales climbed 13% in third quarter versus the same period a year earlier and beat analysts' average estimate by $1.95 billion, while its operating income soared 25% year over year to $26.9 billion. British bank SBC responded to Microsoft's results and guidance by upgrading the shares to buy from hold and increasing its price target on the name to $413 from $347. The bank believes that the company's AI offerings are compelling and he predicts that its PC sales and gaming-related revenue will return to growth going forward. The forward price-earnings ratio of Microsoft stock is now 30.65. That's a low valuation given the firm's rapid growth. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.